This is a very important part of cybersecurity. While I applaud KBA's effort to address cybersecurity, it is important to note that the KaaChonjo campaign should not be one way, only addressing the customer. In order to respond to cyber threats, institutions need to take steps to inform staff, vendors, partners, and customers about emerging fraud trends and how to prevent them. KaaChonjo is a call for vigilance to all. In order to win the war on cybersecurity, all stakeholders must always KaaChonjo, be alert. And frankly, there is a dichotomy here that it's not just the customers, it's also the institutions themselves. Really, all of us, and in a typical Kenyan expression, security starts with us, every one of us. So the institutions, the banks, the card vendors, others as well, and indeed the customer. I'll mention a few things on both. I think we are quite sensitized, maybe on the customer side, and we are not so sensitized about the institution side. So I'll say a few points about all this. But behind all this, technology has led to evolution of the banking sector, especially in payments. Customers have more delivery options that offer convenience. Gone are the days when payments and money transfers would take a week. However, like a double-edged sword, technology presents both benefits and downsides. And one of the major concerns that technology presents is the risk of fraud. Cyber threats are growing in sophisticated and frequency due to increased interconnectedness. Technology has ensured improvement in service delivery to customers. With increasing interconnectedness and interoperability, one cyber attack may be all it takes to cause a financial sector to come under strain. Cybersecurity is a priority, not a passing thought. With each new product, institutions should question whether they have done everything to ensure that cybersecurity is taken care of. Care should be taken not to introduce new risks that may outweigh the benefits of the product. And this is one of the things that, as you are aware, we in the central bank, before we approve a product, we also look at the risk element. It's not just the customer, how will the customer benefit? We also consider what are the risks and how has the institution mitigated or reduced those risks. And if we see a balanced sort of product, then we will approve it. Now, on the other hand, it's true, we are not always right, meaning there may be some products that we thought that the risk on a particular area was not that large. But then with time, we do see that actually that risk is substantial. And so we go back to that institution, and indeed that institution needs to come back to us also and see how you are fixing that. So it is an iterative process as well. So globally, the world was astounded when the WannaCry ransomware infected many computers in 2017. And I remember exactly where I was when that message came to me. Of course, you have to not only know what the problem is, but also know what your response function is, or your response, reaction function really is. In 2018, an attack somewhere else on a payment system led to the loss of the equivalent of $10 million in one institution. In the same year, there was an ATM cash out attack that led to a loss of $13.5 in another institution. These attacks were highly coordinated and took only a few hours to execute. In Africa, criminals transferred $500 million from a central bank in Africa in 2018. Their target was actually 1.5 billion US dollars. Well, due to some checks, that money was stopped, and thankfully the response was fast, and they did not manage to access the funds that they were ready to transfer. Closer home, the National Kenya Cybersecurity Center quarterly reports reveal in every quarter that there are at least 10 million cyber threats in Kenya. You may recollect different cyber attacks that your institutions have experienced. The point is, cybersecurity has become a top priority. That will stay with us, and as long as the financial sector uses technology. One of the easiest ways of assessing an organization's priorities is to review the strategic plan and budget and the effectiveness of their execution. Institutions put their time and money to the things that matter most to them. As institutions focus on how to grow business to the next level, focus should also be placed on emerging risks, in particular cybersecurity. Allow me to briefly speak on 3 cybersecurity trends. The first of this is that cyber criminals have evolved with evolving technologies. And I think this is quite clear. They're as good as the other side. And it applies everywhere. And quite often they hire the best from even the same universities that you're hiring them. So maybe some of us, when we are leaving university, we are getting an offer from your institutions and also other institutions that work in somebody's basement. Anyway, actually, at times they are not in a basement. They are in the 20th floor of some place in Westlands, whatever it is. And they go around dressed like me, or smarter, 91% of cyber attacks begin with spear phishing emails. Very simple. Just phishing, really. And I appreciate it. I mean, this is really, an email is sent. Maybe they know that your interest is in what, dogs or marathons or whatever else it is. And they send you sort of a link that says, oh, this, the other. Now, obviously, I'm very prone to it because I think I'm more at risk as the CEO of an institution, right? But I think the point here is that your staff need to be well aware of this risk. And there has to be some sort of regular training program. I don't like the word training in this context because it's really part of their job to ensure that they are aware of this risk. It only takes one click, and you'll then have the malware infect your computer, and it can stay there for even 4 months. The duration of this malware, once it has infected a computer, is actually quite long. And it sits there, it's learning, it's crawling around, and eventually they get to know where your key defenses are and so forth. It is important, again, because, as I said at the beginning, security starts with us, all of us. So in light of the emerging cyber risks, you may be aware that the central bank has undertaken some cyber security initiatives. Some of these include the ICT risk management guidelines to the banking sector that we issued in 2012, the guidance note on cybersecurity for commercial banks that we issued in 2017. We've done some on-site examinations of financial institutions' ICT systems. And we also have ongoing work, we hope to launch this soon, on the guidelines on cybersecurity for payments service providers. These regulatory and supervisory initiatives are targeted towards safeguarding Kenya's financial sector. However, even where one puts a fence, every house still needs a door. And even with a door, there's a need to be vigilant. In this regard, more has to be done to ensure Kenya's financial sector proactively addresses cybersecurity. KaaChonjo addresses consumer literacy as a tool for cybersecurity awareness. However, even as banks address customers, banks also ought to take a closer look at whether they have effectively addressed cybersecurity internally. In this regard, let me point out 3 areas that banks need to address. First, institutions must regularly assess whether their key assets, and when we say key assets, we mean staff, whether their staff are turning into key liabilities. Highly qualified staff are often categorized as key assets. However, there has been an increase in cyber attacks perpetuated by or with the help of insiders. That is a risk. In this regard, there is need to ensure that staff are properly vetted at entry. Beyond that, institutions must ensure segregation of duties and continuous cybersecurity training and awareness. Further, institutions must develop insider threat programs that seek to proactively assess insider risk and put mitigating controls in place. Additionally, there is need to continuously and effectively monitor staff behavior. Secondly, there's an increase in outsourcing by institutions. While promoting efficiency, outsourcing also presents increased cyber risks. The key risk with outsourcing is that institutions may not be aware of the controls and policies that the service provider has. Institutions need to audit the service provider to ensure they adhere to the cybersecurity standards they promise to adhere to. It is imperative that banks review their outsourcing arrangements and ensure that cybersecurity measures are in place to safeguard them. And in this, I have an example from a different part of the security area, which is fiscal security. You can imagine, and there's a particular institution I'm aware of, not in Kenya, of course, somewhere else, and a pretty secure, they were building a pretty secure building, their offices, and they had a contractor. But one fine day, they arrested somebody who was trying to get into this building after it was constructed. In any event, it was clear that this was a bad person, bad intentions. And when they went to his house and searched and all that, they found the plans of that building. So the question is, where did this person get the plans? It turns out that he'd bought them for just a few $100s from the contractor that actually built the thing. And he had everything. So in a sense, they had built a very strong building, but they had forgotten the most important thing, which is to make sure that that information remained in a very tight and very secure circle. A third point, institutions often presume that third-party service providers are secure. Oftentimes, cybercrime is made possible by overlooking security considerations in third-party connections. In this regard, institutions should ensure that third parties adhere to set cybersecurity standards. Service provided by third parties should be subject to heightened due diligence to avoid the planting of backdoors used to infiltrate the internal systems. As I conclude, the KBA's KaaChonjo campaign is most certainly a step in the right direction in addressing consumers' education and information. In my mind, really, it is changing definitively customers' attitude to things. It cannot be that, I will pass on my password to somebody else, or for that matter, because of, in a case of need, I give my assistant, my secretary, password for my I don't know, email or whatever else it is, secure system, because there may be that moment when she needs to do something, right? And that sort of lack of, let's say, lowering the standards in terms of security is what will lead to a significant problem much later on. So we have to start in a sort of a clear way right from the beginning.